So thank you very much, everyone, for joining us today for the webinar on the convergence of the physical and financial supply chain. It's a very important discussion, especially during this period of the crisis. We have very distinguished panelists, experienced and industry leaders of their own who will take us through some ideas, some opportunities. Feel free to comment throughout the webinar on the chat box, and Sarat will give you, who is our moderator, will give you other ground rules for the webinar. For now, I will take you through the keynote to set the tone and contextualize this webinar. In the current situation that we are in, many organizations are looking to keep their employees and the community where they operate in and their products safe and healthy, which is very important to protect our lives and make sure that the community is guaranteed of safety in everything we do. However, the ultimate well-being of the societies where we live in, of our colleagues, of our companies, is if we can economically recover from the smallest organization to the largest organization to ultimately the nation. A very key component of this recovery is cash. The natural instinct of an organization in this moment is to conserve cash. Thus, this discussion of the convergence of the physical and the financial supply chains to see how we can still preserve cash, generate cash, and unlock liquidity. Cash flow is what comes in and out of the business. Cash flow gets into the business from the customers, and the faster, the earliest, and on time that we can receive this, the better. And we get cash out mostly in the supply chain, on labor, on overhead, on raw materials, on assets. And we need to ensure that these, where we spend money, they produce money as fast as possible, and we're able to accelerate this throughput through the value chain to ensure we get money in, pay our suppliers on time, and survive. And as well thrive. Cash flow and working capital is like blood in the veins of a business. Without it, you cannot survive. Some of the solutions that we will probably be looking at without preempting is the short-term solutions, advance and early invoice payment, trade contract and purchase order financing, intermediary, things like inventory financing, distributor finance, long-term financing like leasing on all your assets, ICT vehicles, machineries. And we want to look at how you can accelerate your day sales outstanding for suppliers to receive payment earlier, but also for large buyers, how they can defer their payment terms without compromising the payment with their suppliers, the relationship with their suppliers, but meeting the health status of their cash. As House of Procurement, on our work in procurement excellence and supply chain transformation, you realize that 80% of your spend is only with about 20% of your suppliers. And these people who take big spend, big buyers, really influence the economy. So one big buyer, like we have one of our panelists, British American Tobacco here, or Telkom Kenya, or the multinationals or government, controls a lot of spend, and we would like to see the solution that they can come up with to support small organizations, medium-sized organizations. Our offer on our end on what we do, we are able to buy on your behalf. We are able to partner with the likes of Standard Chartered Bank and other partners on the leasing side to pay suppliers early on times. We are able to offer you solution on financing and managing your inventory, as well as assets, and as well as look at your logistics for fulfillment to ensure we deliver on time. Then give you options as a big buyer or a small buyer to pay us in 60, 90 days, or 120 days, or quarterly. The principle that we have is to give small businesses a big stick and to give large organizations, large buyers, peace of mind. Thank you very much and welcome to today's session. I hand over to our moderator, Sarat Mohanty.
Thank you, Mr. Benard. Welcome everybody. Good morning, good afternoon, depending on where you are. First of all, thank you very much for taking the time, joining the webinar. To kickstart, let me introduce all our esteemed speakers. We will start first with Mr. Pramod, joining from Singapore. Pramod, if you can introduce yourself, please.
Yeah, hi, I'm Pramod. I'm based in Singapore. Yeah, I have 20 years of experience in designing, developing digital banking solutions and working very closely with corporates. here at Standard Chartered. Now, from the past 2 years, my focus has been bringing the banks, fintechs, and other players together to create some of the innovative solutions around supply chain finance space. I look forward to our discussion, and thanks for having me in the panel, Sarat.
Thank you, Pramod. May I invite Mr. Mohamed for your introduction, please?
Thank you. My name is Mohamed Arfeen. I work for Telkom Kenya for the past 2 years. I'm based in Nairobi, but today I'm calling from Cairo. I have 20 years of experience in the supply chain and procurement function in different organizations, mainly in the past 10 years in the telecommunication industry. And I come up with a recent program of transformation and supplier development with Telkom Kenya. Thank you.
Thank you, Mr. Mohamed. Can I have Devesh please introduce yourself?
Thanks, Sarat. Hi, I'm Devesh Srivastava. I worked for the last 25 years with Standard Chartered, and a few of them in Africa, based in Johannesburg, currently based in Singapore. Last 20 years, I've worked with supply chain finance, where we started distributor financing, supply chain financing within the bank. I worked on deep tier financing, as we call it, in China, starting supply chain financing in Africa, and in the last few years, developed a lot of database AI models for use within the bank. I now run my own credit queue consultancy business, and we are also starting a invoice financing platform at a fintech in Singapore. I'm very happy to be here. Thank you.
Thank you, Devesh. Can I have Philemon please introduce yourself?
Good morning, everyone. Philemon Kipkemoi is my name. I'm the finance director for British American Tobacco for Eastern Africa. I've been in the finance field for over 17 years now. Primary interest in supply chain financing is because we utilize most of those products, and I'm looking forward to interacting with you, sharing our experience, and probably learning something new. Thank you.
Thank you, Philemon. Can we have Ishmaill please now?
Thank you, Sarat. My name is Ishmaill Bett, the CEO Association of Kenya Suppliers in Kenya. And I've been with Association of Kenya Suppliers for the last 5 years as the CEO, working to see to it that suppliers issues are addressed, and majorly most of the issues are revolving around payments, non-payments, among other things. And in line with what you're discussing today, it's our interest as suppliers to get to know how we can unlock liquidity, and especially for members. You know, as a supplier, big suppliers are also buyers at the same time. So it's a very important discussion for us today. We'll share our experience as association suppliers, representing suppliers of Kenya, and our suppliers are actually drawn from importers, manufacturers, farmers, service providers, among others. Thank you. We are happy to be involved.
Thank you, Ishmaill. Bit about myself. As you can see, my name is Sarat Mohanty. I run our global trade finance client implementation function. I'm based in Singapore. I've been with Standard Chartered for almost a decade now, and have managed various functions around client delivery and implementation in Middle East, North Africa, Greater China, North Asia, Southeast Asia, ASEAN as well. Prior to joining the bank, or prior to joining trade finance in the bank, I've spent almost a decade with a corporate managing their supply chain, covering both Asia Pacific, Europe, Middle East, Africa, US, and Europe. So as a result, as you can see, I come from the physical supply chain background. Now for the last decade, I've been doing the financial side of the supply chain. So I have an interesting perspective. When I see the supply chain end to end, I can correlate the both physical side as well as the financial side. So that's about me. So thank you very much, esteemed speakers. for your introduction. I think the panel looks pretty good for today's webinar. So let's get started with the webinar topic, the digital convergence of physical and financial supply chain. Some logistics for the participants. All participants are on the silent mode. If you have a question, we have a Q&A session at the end. You can post your questions through the Q&A box on the link that you can see. But during the seminar, if you have anything that you want to post, you can utilize the chat functionality to post your comments, observations, where are you from, so that we can look at them and then answer them during the Q&A session. So what exactly is a convergence of physical supply chain? Corporate supply chain process involving sales forecasting, production planning, inventory planning, warehouse management, procurement management, logistics management, supplier relationship management runs on its own track. For banks, the financing supply chain, either on the payable side of our customers or in the receivable side of the customer, is largely managed through the finance and treasury function of the corporate. These two operates in silos. There is no or little integration or leverage between these two parallel track. When I say parallel track, one is the corporate supply chain and the bank's financial supply chain. So the end-to-end supply chain is truly complete when a physical, financial, and information flow converge to create a seamless supply chain ecosystem. That's in essence what we see as the convergence of physical and supply chain that we will be spending most of our time in the webinar discussing today. Now you must be wondering why it is so important. Yeah, if you look at the corporate side, it's a huge opportunity lost due to the lack of convergence. Why do I say that? For corporate, if you look at the buy side, when you buy your product or your supplier that you're talking about, at times your preferred suppliers fall out due to the cash flow or the working capital issues, challenges your supplier face, resulting the buyer to settle on a non-preferred suppliers and losing out, more importantly, on the cost of goods sold leverage. If you have a good supplier, the price is good, the quality of the product from the supplier is good, but because the supplier had working capital challenges and for whatever reason you couldn't buy from that particular supplier, you are losing an opportunity from a good supplier. But if you also look at the sales side, the same story, a customer or a distributor who is willing to sell more or can sell more, but again falling out due to the working capital issues that particular customer or the distributor may have. So it's resulting in a potential decline in your sales growth. If you look at the bank side, the key is to find a place in the supply chain process during the planning stage and not at the execution stage. Now, why do I say that? If you look at today, most of the banks or financial institutions are part of the supply chain in an execution phase. When you deal with a supplier, when you already selected a supplier or you already decided a particular customer or a distributor to do business with, but then you realize whether the supplier has a cash problem or your customer has a working capital problem. That to me is an execution phase. Sometimes that is too late. So the opportunity for the bank is to really collaborate, play with the corporate at their strategic planning stage so that it can play a very strategic role for their customers. That's why it is critical and important for both corporate and the banks to be part of the convergence of the supply chain. Now, having defined what a convergence would look like and why it is important, now how can that happen? It's good to define the problem, but then what needs to be done and how can this happen? For corporate, including the finance, including finance as part of their sales and operation planning, as it is popularly known as S&OP process, or the collaborative planning and forecasting replenishment, as popularly known as CPFR process. How can we find a place for financing in this process? As most of you who are in the corporate, they know the S&OP process or the CPFR process are pretty much at the planning stage of the function. And if we find financing at that point, then the convergence will start at way in the planning stage, not at the execution level. Use financing as an unconstrained tool to unlock the constrained sales plan or a production or a procurement plan. For bank's perspective, if corporate can share their historical purchase order and invoice data with the banks, so the bank can use that data to address their credit risk when particularly financing your customer or your supplier. With the evolution of digitalization, this can be easily achieved. So let's now hear from our esteemed speakers on the convergence journey, what they think about. So we can start. The first theme is around collaboration. Collaboration is no doubt is key to facilitate the convergence between a corporate and a bank. Whether it is a buy side or a sell side, process of collaboration is absolutely critical. Should it be a strategic or a tactical, or it will be both? We will focus on two aspects of the collaboration. The first part is around process. The second part would be around system, data, and information. So let's begin hearing from our speakers. So what you're going to hear from each speaker in broadly two areas. Why it is important for you, and what would you do differently to collaborate both from strategic and tactical point of view. So with that, let me now ask Mr. Mohamed to share his thoughts. Please, over to you, Mohamed.
Thank you very much. Well, I see that the process need to be open a bit in order to open doors of convergence between the corporates and the financial institutions and banking industry. Definitely to understand what are the key processes which the bank is interested in to secure funding. And also from corporate side to share information, as you've mentioned, sharing historical information about purchase orders, commitment to suppliers, invoicing history, health check on supplier performance in terms of delivery, health check on the payment history with the suppliers from the corporate to their value chain. So basically to converge the information and to exchange it, and also to look into what are the relevant data and information which will support the process. The way I see is that we have an opportunity right now to do this because of the current environmental changes, which will definitely help us to drive this faster.
Thank you, Mr. Mohamed. Let me now invite Mr. Philemon to hear from him how he thinks the collaboration is critical from his point of view. Mr. Philemon.
Thanks very much, Sarat. And I would echo what Mohamed has said. Typically for suppliers or for big corporates like us, the first thing on the buy side, if I use our example, if you look at the inputs that we get, if you deal, for example, in FMCG and in predominantly agricultural products, then you have a long lead times and you have long requirements for maintaining a lot of stock. So that means then your cash flow cycle is impacted. So we use, for instance, the SOP process to just make sure that we can be able to understand how the timing of our cash flows will pan out, and more critically, collaborate with banking institutions to unlock money so that we can be able to maintain adequate liquidity through the period. From a collaboration perspective, I think two areas. From a corporate side, we have a lot of information and a lot of data, which we need to get very close to our partners or our banking partners to be able to share with them, and then they are able to then make credit risk assessments. I think the most important thing from a data sharing perspective, obviously making sure that the data protection laws are observed, is to get closer, the banking institutions to get closer to their customers or to the corporates, in the sense that how well do they understand the business, for example, different businesses. So making sure that they stay close to the business. And I'm sure that no two businesses are the same. So if the banking partners become business partners, as it were, then it helps a lot. On the second point of the pandemic, I think what we have seen is there's a lot of strain downstream. So if you look at your trade partners, currently they are experiencing a lot of liquidity issues. So yes, they may be able to willing to purchase or to sell more, to stock more, but they are constrained on cash. The challenge that we are seeing, or what we are facing in the market right now, is the speed of execution in terms of the collaboration with the bank. So how fast can you get that liquidity to be unlocked? So that is an area where I can see, from a collaboration perspective, improving the speed of execution and just making our business processes agile to be able to respond to changing dynamics like where we are now.
Okay, thank you, Mr. Ishmaill. Moving on to now, let's hear from Mr. Devesh. I think you have both, on the financing side, as well as spending a lot of time on the digitization around the deep tier financing. It would be good for you to share your views and perspective, both on the process collaboration with the corporate, as well as from the system and information side as well. Over to you, Devesh.
Thanks, Sarat. I mean, to be fair, collaboration actually is key. I mean, and if I may use a phrase, supply chain digitization is no longer optional, irrespective of where we are and what we do, which business the corporate is in or the suppliers are in. It is no longer optional. Yeah, you did touch upon the fact that treasury and procurement need to work in tandem, but I would like to pick up where my previous speaker did speak about the fact of the stress in the supply chain, right? In the current context, it is even more so. And that's where the working together comes in, where the banks, the fintechs, the platforms, and the corporates can work together to really build a seamless, and I don't use the word seamless is very often used, but I'll quote an example. We have, by working with, say, BAT, right, with their ERP systems, their past track record of their own suppliers. Right? Using that data, we can build models, and we have built models. We can build models which can predict as to, for example, which invoice of their supplier they are most likely to pay. So the big difference so far has been in financing the supply chain has been because traditional lending is done against collateral. You can only have X amount of collateral. We have, as banks, not been very successful in the past because we didn't have enough data. But today we know how to pull that data and how to use that data. So in the example I was quoting about, we can actually build models which predict which invoices will get paid. So the moment a trusted supplier has raised an invoice, he can actually get paid even before an acceptance by the corporate actually kicks in. What does that do? It enables a monetization pretty quickly. It enables the supplier to ramp up. It enables him, as was mentioned by the previous speaker, it enables him to hold higher inventories. So actually AI models and using data, and again, all this data is pretty seamless. We can actually pull data in and onboard suppliers all digitally. So actually the convergence is now available. It is up to us to seize the initiative to be able to bring in both or all three aspects, the digitization part, how do you use data, and then how do you make the physical and the financial supply chain converge. Thank you.
Thank you, Devesh. Very well said. As you said, the opportunity is already there, and how do we seize the opportunity? So that's a perfect time to hand it over to our next esteemed speaker, Mr. Pramod, who is pretty much in the front of all the digital, exciting, fun things that are happening in the bank and the corporate. Welcome, Pramod, and over to you.
Thank you, Sarat. Thank you. Exciting topic. I think let's focus a bit on the how. I think all the panel speakers have spoken about the why. So let me just share my thoughts on the how, right? So just if you take a step back, typically the corporate and the bank connectivity space, has been dominated by web portals. Banks floated these online portals, and corporates got onto these portals and gave some instructions, transacted, got some visibility on their accounts, etc. But and then slowly some of the corporates demanded, some sort of a bulk mechanism, and banks responded by giving solutions like file transfer solutions like host to host, or even some Swift based solutions, etc. So typically the last decade has been dominated, the bank and the corporate connectivity space has been dominated by such web host to host type of solutions. But if you hear my fellow panel speakers, etc., these type of solutions never make banking as a business partner, like how Philemon mentioned. Right now, to do that, I see two significant digital trends that are happening in the past couple of years, and that's why I think, like Devesh said, the opportunity is now. So, what are those two digital trends that I'm seeing that we all can be very optimistic about this convergence finally happening? First is that what I call the seamless banking or the invisible banking. Many corporates like British American Tobacco and big corporates in Africa, we are seeing where they're asking the bank to come and embed themselves into their corporates' ERP systems, treasury systems, the procure-to-pay portals that they're using, bringing banking closer, exactly to what we have been hearing from the past few minutes, bringing banking closer to the procurement cycle. It's a fundamental paradigm shift from the earlier days. It's not the corporate coming to the bank anymore. It's embedding the bank into the corporate's treasury systems. Now, this is making a lot of the collaboration and making the banks a little more closer. I think there is still way to go, but a little closer to what, making bank a real business partner. But that's opening doors. Now, as a bank, rather than waiting for the action to happen, I am embedded into the supply chain process. And so I'll give you an example. In Africa, as Standard Chartered, we work with a big steel manufacturer. And so we had access to the actual supply chain action it's happening. And rather than typical supplier financing, where the supplier comes to us and says, hey, here is an approved invoice, can you finance it for me? I'm now able to flip and say, supplier, I see that your invoice has been accepted by the buyer. Do you want money? Or, this is convergence in action. Or the other way, I can go back to the supplier now and say, hey, I see that you have received a big purchase order. Would you like a pre-shipment financing? So by embedding banking digitally into these corporates, ERP, treasury systems, the convergence that my fellow panelists have spoken about is slowly emerging. I'll highlight one more digital trend that is actually making it a little more faster, the convergence, and that's APIs. I think APIs, that one single digitalization trend, has brought the connectivity cost lower, has brought real-time plug and play information systems. And so what's happening is there is an ecosystem type of solutions, holistic solutions coming up. It's not just the corporate and the bank anymore. Solutions are getting richer because through APIs, I can now pull some sort of customs information, logistics partners information, and then blend it and then offer more superior solutions. So I think this sort of invisible bank, where the bank is sort of becoming faceless and inside the customer systems and APIs are finally bringing that convergence. And I think the time has never been better. Like Devesh mentioned, I think it's up to us to seize the opportunity, and technology is making it all possible.
Thank you, Pramod. Embedding banks into the corporate supply chain process. And I like the word, the most invisible bank in corporate supply chain. Very well said. Okay, I think to summarize, I think if you look at, we all agree that collaboration is absolutely the key and the fundamental to the convergence, and in convergence, it is inevitable. And what is, I think, the biggest advantage where we are right now, thanks to the digitalization world, I think the opportunities or the solutions are at your doorstep. It is up to each of us. How do we capitalize, leverage, and then play with each other? I think that is what is going to define the success of this collaboration. With that, we move to the second topic of our webinar today, which is around what are the key opportunities and how we are trying to grab them. So with that, whether this opportunity, we just briefly talked about, is it about growing the sales through your customers, distributors, or it is optimizing our inventory levels, or it is going to achieve a better supplier relationship management, or are we trying to bring in the financing part of your strategic plan, and then of course improving the cash flow and the working capital. I think the opportunities are endless. Whether you look at from the bank's lens, opportunities are absolutely endless. If you look at from a corporate lens point of view, the same story is there. So with that, now how do we grab those opportunities and how do we make a headway into this convergence is the next topic for all our discussion. So I think in this topic, what we will talk about is, what are those key opportunities that each of you think? And I would really encourage you to use one or two examples in your respective area so that at least, we get a clearer view in terms of when you say that I have an opportunity, but what exactly is that? How do people put their finger or hand to that particular opportunity, feel that is an opportunity? And then second thing, what would you do differently now that you all have spoken about the collaboration, the digitalization, the opportunities, but having acknowledged that you have an opportunity, but what would you do differently? Yeah. So let's now again hear from our same speakers. Maybe this time around start with Mr. Philemon. If you can share your thoughts, what are one or two opportunities that you have in your organization, and what would you do differently this time to approach the convergence?
Good. Thanks. I think one key opportunity that comes to mind and something that we are exploring currently is capitalization of our trade partners after the pandemic. So one of the key issues that we have seen is obviously at the advent of the pandemic, a lot of outlets were closed. And then when they have started reopening slowly, we've seen that there is a very big strain from a working capital perspective for our trade partners. So what are we doing about it? The first thing that we've done is we've approached a few banking institutions to be able to leverage on the information that we have, because these are trade partners that we know for a lot of years, and we have very good information about their history and about their credit worthiness, because we have been dealing with them for a while. And then now working with the bank to make sure that they can tailor products to enable the recapitalization of these businesses. It's critical for us in the sense that if our trade universe and our trade partners do not get back on their feet, then we don't have a sustainable business into the future. So at this particular moment, I think that is a critical opportunity that I see. From a collaboration perspective, I think from what would we do differently and how are we implementing the learnings, I think we need to approach credit under these circumstances from a different lens. So we don't, from a banking perspective, not to apply the same credit scores or the same credit evaluation that we used to do in a normal environment, because the circumstances have shifted and the ground has shifted. So how do we become more agile and become more open-minded, obviously taking reasonable risk, but also accepting that in order to be able to seize the opportunity, we have to take some risks. So more collaboration with the banks and probably adapting their processes and adapting their systems to be able to deal with this immediate problem. The other opportunity, which is more long-term, is the same effect is on your suppliers. When we have seen the supply chain over time, the lead times now are becoming longer. And how do we then develop local suppliers? How do we use this opportunity, sort of not waste the pandemic, to develop suppliers for inputs locally so that we can be able to address that need? So that probably requires a lot of investment in development so that we can be able to migrate some of the inputs that we were getting outfield to make the suppliers locally more competitive and therefore be able to mitigate some of the supply chain disruptions that we are seeing. So those two areas are critical. The first one is more collaboration with the banks and using our data and our information that we have to be able to recapitalize our trade partners, and from a corporate side, being willing to put a skin on the game to be able to put some guarantees or to be able to put some assurance to give comfort to the banks. And on the second side, I think it will be identifying those suppliers that you need to develop and now partnering with financial institutions for a longer term financing to be able to develop the capabilities and assure them of, for example, business over 2-3 years so that they can be able to recoup their investments. So those are the two areas that I see as being critical and being key opportunities at this particular point.
Thank you, Philemon. I think if I take away, from your thought, was you echo the same thing what we've been talking about. Devesh alluded on, providing the data, the historical data to the banks, so that they can do the due diligence for your supplier or your other customers or distributors. So I think that is definitely would really unlock a lot of the bank's process to ease the credit assessment that goes into the financing. Very well, thank you. Let's hear from Ishmaill. Ishmaill.
I should have missed out in the first conversation.
You can combine the collaboration and the opportunity the same. Absolutely.
Exactly. Thank you. Now, where we sit as suppliers, actually, it's a big question about big buyers versus small suppliers. And to us, we look at it as from where we sit as a liquidity issue that we wish to explore all opportunities that actually unlock more liquidity to the supplier. And being a supplier is sometimes it puts one in a very precarious position where some of the products just supplied could be the government, could be retail chain, could be to other organizations. You might not be so certain about getting this money back. We've seen in Kenya some of the retail shops that goes under, and they go under with supply of money. We've been victims in the past. Some suppliers in some chain, for example, in Mohamed, they lost about 18.6 billion. Other chains went under. Uchumi went under. They are still struggling to come back. Again, with some money, about 7 billion. Currently, we are also handling another issue. Another chain is checking. We don't know. About 6.2 billion is at stake. We don't know when this one can come back. Again, it's a big question of how can we navigate through this path. Having suppliers in that position where it's like they are financing the retail sector, and they don't know when and how they can recoup their money. And on the worst case scenario, where a chain goes under, they are the last in the cadre to be considered in the unlikely event that this ends up into liquidation or insolvency, well, they're the last cadre to be considered, meaning they might not be paid after all. So this is a very important discussion for us. It is very important for suppliers. It is very important for us to understand. It comes with opportunities, this synergy and this collaboration between the banks, the financial supply chain. We look at more opportunities that can actually salvage the situation or can make the business environment more easy. Having said that, some of the suppliers are actually so small. Some are actually SMEs. They might not have collateral to access credits in the bank. So maybe their recourse could be trade credits, and would wish to explore on how to convert account receivables to credit with customers into working capital financing, which is a very important aspect to us. It's an opportunity to us, it's an opportunity to the supplier. Can we convert this one into, these receivables into capital finance? And well, as from previous discussions, it is possible if we build this synergy between the banks, the fintech, and the suppliers. And well, we believe this can give us a solution. It can actually unlock quite a number of finances. Having said that, the opportunity that we are looking at it as a low-hanging one here is unlocking this liquidity, growing, which will give us an opportunity to grow our sales, optimize the inventory level. Where we sit, we believe the collaboration that we intend to build, it's an active discussion with that we've been having here with our members, with our financials also, to have a look at which opportunity, which areas can we explore so that we can access these opportunities, or we can tap on these opportunities that are coming on our way. And we believe this is the right direction we are heading. The collaborations that we intend to build, the partnership that we intend to build, will give us a upper hand in sorting out the upcoming or the issues that we are facing at the moment. Thank you.
Thank you, Ishmaill. I think I like your thought process around to ease the supplier collateral. Looking around the converting their account receivable, absolutely is the way forward to address some of the challenges or the gaps that exist in the industry today. Thank you. Let's hear from Mr. Mohamed.
Thank you, Mr. Sarat. In our industry, in the telecommunication, as you know, the connectivity is key. For example, this webinar requires devices all over Kenya and abroad. So one of the opportunities actually, as the demand has increased recently for the devices, is to support the funding for our value chain for the device fulfillment partners. Out there in the market, we have partners who need to stock more of these devices in order to serve the customers. So the opportunity, I think, is to sit on one table, either through a system or physically, collaborate between our partner suppliers, our corporate financing team, and the banks. Hence, we come up with a seamless agreement which secures the funding for our suppliers. I've seen that a lot of the opportunities of supplies are being facing some challenges due to the cash management. That's one of the arms on the sales and distribution direction. The second arm I see in our network operations As you may imagine, we need to expand our network to secure coverage and connectivity nationwide. Hence, we require to invest more capex in our equipment. So, securing long-term finance agreement, and this links up with the strategic planning, which Mr. Sarat mentioned in the beginning of the webinar. So basically, to enable this collaboration to secure funding for equipment to expand our network requires us to plan ahead and plan well on the network expansion. Also find the right mechanism and systems and tools which link up our key suppliers with the banks. Basically, these two opportunities are key to support our industry. Our industry is very dynamic. A lot of technologies are coming in, and it requires continuous investment and upgrades. I think a key enabler for this is some systems and tools. One of the things which came to my mind is an integration on ERP. So I remember in some best practices in Europe, for example, the supplier posts an invoice, it links up to the corporate ERP, and then it's seen by the bank in order to process the payment. And the supplier can have a visibility on the progress of the invoice and the fund transfer from the bank to his account. So something like this, I find it in an opportunity, and it can be implemented in our region.
Thank you, Mr. Mohamed. I quite like what your observations around sitting across the table, making sure, and then trying to address the growing demand. Obviously, you are very interestingly poised, the industry you are in. Whether you take the device side of it or you take the network expansion side of it, I think the demand across the world is skyrocketing, particularly on the telecom partners. So yeah, absolutely, ERP integration that you just referred to, this solution do exist today, even at Standard Chartered Bank. And I will let Pramod now, take it forward, the same discussion that we started on key opportunity, and how do this platform technology can really, facilitate and then seize the opportunity that you all have spoken about. Over to you, Pramod.
Yeah, sure. So in terms of opportunity, I think it's an interesting discussion. From where I sit, let me just sort of categorize into the big buyers, and I think and then the suppliers. But if you put the focus on the big corporate buyers, right? I think the opportunities that I see, and not drastically different from what my fellow panelists have been highlighting, the opportunities that I see on the big corporate side are, yes, ERP, letting banks into their ERPs, letting banks into their procure-to-pay portals, just like what Mohamed mentioned, then getting that visibility. So, and then getting comfortable with sharing the data with the bank so that the models and all these can be run. So I think this is the big opportunity that is there in front of us. That is where you can actually do all these data models and analysis. The other opportunity I see on the corporate side is probably something that we didn't touch upon, is the Internet of Things, etc. I'm seeing some opportunities right now in Africa, for example, warehouse financing, etc., where banks are partnering with fintechs, and not only are they able to read these events as they're coming in, but are also able to interpret these events and say, okay, you've now received the goods, so let me convert your pre-shipment financing into post-shipment, etc. So this sort of data, Internet of Things, these are the big opportunities that I see on the corporates or the buyer side. If I shift my focus now to what Ishmaill has spoken about on the supplier side, I think the big thing that I see there are especially in a market like Africa, mobile solutions. A lot of suppliers are asking us in Standard Chartered, and we have responded. We have given them our mobile solutions. They want quick action on their mobile. Looking at their documents, looking at their invoices which their buyers have accepted, taking money, only when they need, thereby reducing the interest that they need to pay the bank. So mobile-based financing solutions are something on the rise that I see on the supplier side. The other thing that I see is also what Ishmaill mentioned. How do you convert these receivables into assets, right? And say where there I see marketplaces, fintech, some of the good platforms, fintech marketplaces creating an exchange for these assets and making them as liquid as possible. Liquid assets. And so I see some on the supplier side, some of these marketplaces and fintechs emerging. So if you span, so on the buyer side, it's about data, ERP, probably IoT, etc. And on the supply side, it's about mobile solutions, working with fintechs and getting those receivables discounted, etc. These are the spaces that we are seeing here from Standard Chartered, Sarat.
Thank you, Pramod. I think let's hear now from Devesh. I think he has some good experience, particularly what he calls it as a deep tier financing in China. I think this is something which is a evolution starting to happen. I will not be surprised if it reaches Africa very soon. So let's hear from Devesh. If he can share with the team and the participant, what is the technology behind it, how it is going to really address some of those supply chain choke that exists today. Devesh?
Thanks, Sarat. I would like to break it into two parts, right? One is where Philemon spoke about capitalization of trade partners, and the IoT piece which Pramod spoke about, to kind of combine the two. I think it is also very good to hear from both Philemon, Mohamed, to say that they talk about putting some skin in the game. The fact of the matter is COVID-19 has changed everything, right? We all realize that we'll talk about it, but the fact does remain that it is no longer the financial institutions or the governments or the buyers or the suppliers who can by themselves do it. We'll all have to put our skin in the game. So clearly, I mean, in terms of, if you look at trade partners or an IoT solution, in terms of how do you capitalize, I mean, this is an example of what one could do. We used devices. There are two ways of doing it. This is for automobiles and has been use case in other pieces also, where we put small devices in every automobile. The moment it leaves the manufacturer or the importer's plant, the moment it reaches it, the platform is able to track those devices once they reach leave the warehouse of the importer or the manufacturer, and creates an invoice on the distributor. Clearly distributors have not been selling cars, for example, so therefore they are starved of capital. But since now the supply chain platform can track where the cars are headed, and then the cars go into the dealer's, let's say, warehouse or in their showroom, a geofence gets created, again electronically, so at any point in time one knows where the car is. And so therefore one is able to lend against the inventory. Typically supply chain finance has not been able to lend against inventory, but using technology or IoT devices, we lend against the cars. The moment the cars are sold and they move out of the geofence, that is the time that is allowed when a retail buyer comes and buys. So therefore, in a normal case, dealers require a huge amount of finance to be able to fund these floor plans. But using an IoT solution, you can actually fund a lot of trade partners of this kind. And the same can be used actually for mobile phones also, because mobile phones again can get tracked and actually can also get disabled if there is collaboration between the manufacturer, the telecom provider, and a supply chain platform and the funder. Then right from the time they reach the manufacturer, one can track those phones in terms of subject to data privacy, and we are conscious of that fact, in terms of location only when they leave out. So to right to the end when a partner buys them. So therefore, like at the distributor side, they get the locators get switched off when they are sold to a retail distributor. So IoT actually can get in to help in a lot of technology, can get in to help in a lot of solutions. So that was more on the sell side and with your trade partners. But the other piece that also comes to mind is that today we need to share risk, get in insurers. So today insurance is, bring in more and more players. Insurance, credit insurance in Africa is still limited, but I think that will add another factor to the chain. The other part where we spoke about was on the supplier side, right? I mean, clearly, in terms of monetization of the suppliers, one can be in terms of the receivables, whether an insurance can help them. The second is, how then do you help them extend it to the payables? And a deep tier finance solution works very well out here. What we use is a blockchain enabled platform where from the large buyer like Telkom, they sales to a major supplier, and this supplier could, for example, even be Samsung, to take an example. So when Telkom agrees to pay Samsung for those particular phones, that receivable gets created. Typically, that's where invoice financing ends, because it's at the receivable of Samsung, which every bank is able to finance because our risk is on Telkom, the large buyer. But here what happens is that this particular $100 of or 100 Kenyan shillings of invoice now is broken into $1 blocks each using the blockchain platform. And these can be used by Samsung to pay, let's assume the delivery company, which is bringing in the Samsung mobile phones from Dar es Salaam. The mobile company can actually, so therefore these $100, they can pay $30 to this transport company. They can keep $30 because they don't need funding at this point in time. And if they need funding for the balance $60 or $40 left, if I get my maths right, they take funding. So therefore this $100 shillings, they're able to split 30, they pass on as a payment. 30 they keep because they don't need. 40 shillings they encash as a receivable, part of the supply chain, which is telecom risk on the other side. So they get funding also. The beauty now is that the logistics company, which is doing the transshipment, that can also has the same options on this on the platform. So therefore it can keep $15 because it doesn't need the funding. $5 it can pass on to the petrol company, maybe if it is also on the platform for payment of petrol. And balance $5 or whatever is left, it can, if it needs cash, it can encash that. So therefore it can pass on to the next and the next and the next. So that enables deep tier financing, and so therefore enables you to use your receivables to actually start paying out, and at a much lower cost. So therefore it enables you, the supplier or the entire supply chain to become far more robust, because we are able to therefore enable usage of the more acceptable bankable receivable all the way down the line as a payable. Each level down, you get a much better risk, and the platform is available to provide liquidity. So therefore, if one does not like liquidity, one can take that. It improves the risk profile. So multiple solutions actually kind of are today available, and that brings me back to the same point of saying that today, the good part is that solutions are available. If we were talking about 3-5 years back, we didn't have enough solutions today. I think it is the need for us all to sit together and agree that we all need to take risk to maintain our supply chains. Thank you.
Thank you, Devesh. Absolutely, it's a very exciting technology piece of work. I think I'm sure in the years to come, this should really make an impact the way this whole financing takes place. Obviously, before we go to the Q&A session, we really can't escape, the biggest, the challenge, the issues that every single industry is facing, which is the COVID-19. I know that we deal, some of the speakers did touch around one or two things, but we don't have much of time, but we just take one quick win example, either from Mohamed or from Ishmaill or from Philemon. If you can have one, articulate one quick win or challenges that you have, then we can probably ask Pramod and Devesh to see, how that financing, challenges can be resolved. and before we move to the Q&A session. So we'll have to be very quick because we're just running a little over the time.
If I may put one of the challenges actually, how do we accelerate faster the digitization of certain processes to get approval on funding? I think with the COVID-19, some manual forms are still in place with the banks, and this somehow creates some obstacle and delays the process a bit. It might be different from one bank to the other, but generally I've found out that our suppliers has some challenges, and even ourselves.
I think, thank you, Mr. Mohamed. Devesh or Pramod, you want to take that?
I can. May I take it? I mean, and that's may I take it, because Pramod can talk about, and StanChart is actually built digital platforms, but that's where people like us come in, right? So platforms today have built the digitization platforms. I mean, we have built the marketplaces for buyers, suppliers to all come in together, and it is a democratic process. So therefore, actually, it helps bring down the cost of financing also, because whichever bank has higher liquidity may be able to hire a cheaper finance also. And so therefore, work with fintechs, work with these trade platforms. They are our partners. I mean, we are partners, sorry. So clearly that would help change the game, because they have the ability to help everybody log on.
Thank you, Devesh. Okay, I think just time for us to move to the Q&A session. If we can go back to the forum, are there any questions? Q&A. There are 2 questions.
I answered one. I answered a couple, Sharat. Yeah.
Okay, you already answered. Very good. You've answered one. Still one is unanswered. Which one is not unanswered? You answered the our experience trying to get.
Yeah,
okay.
I think one of the trend in the questions that I'm seeing, whether it's in the unanswered question or the answered question, is that people, the audience, feeling that banks have not been very collaborative, while they may say so, but they're not collaborative. In some sense, I agree. Banks have been monolithic institutions maybe, but now I say things are changing for 2 reasons. One, fintech partners are on the rise. People like Devesh are putting us on our toes. So I think banks are changing for the better. The second thing I think is technology. I think technology is becoming cheaper. There's lots of regulator industrial consortium action that's happening. The barriers to technology are falling down. So I think some of the audience sentiment that banks have not been really collaborative, I think is changing and will change at a faster pace.
Thank you, Pramod. I think there's one question which comes from Stanley Ombok. What could be the role of insurance institution in cases where corporates go under? This is to cushion supplier from uncertainty. Maybe Devesh, you want to answer that? Particularly the role of insurance, yeah.
Yeah. So therefore, if you think about it, I mean, there are insurance agencies in Africa which are doing that. I mean, South Africa, for example, has a number of insurers today. East Africa, I mean, it's FXIM and a couple of others who are there, and more insurers are typically looking to come in. The problem with insurance coming into Africa in the past has been availability of enough data. And that's why I'm saying that everything has come together. I mean, the more we work with digital platforms, or the more digitally the banks, the institutions work together, more data, the insurers will also have to kind of build that in. So we ourselves as StanChart have been working with insurers to bring them into Africa, and more will come through. So yes, you are right. Insurers will play a big role in reviving the economy everywhere, and especially in Africa.
Thank you, Devesh. The next question was, as Devesh mentioned, skin in the game is ideal, but not a reality in Africa, East Africa. I can tell you, obviously, what is changing now. If you look at from the bank's point of view, I just said banks traditionally have been speaking to the finance and treasury, but as we've seen, the collaboration now facilitates the financing to being dealt at the strategic planning level. By virtue of that, the banks and financing institution or the fintech would be able to open the door and have a discussion with the supply chain team, the procurement team. So similarly, once that happens, it also opens a similar door for the people, for the folks in supply chain or in the procurement to have a data integration with the bank. So therefore, it is a matter of time when the financing or the banks or the financial institution find a role for themselves in the strategic planning area. I think this whole skin in the game will become a reality in East Africa. I think that's my view on that. The next question, it will go to probably to Pramod. Is banks like Standard Chartered open to collaborate with the digital marketplace?
Yeah, that's a good question, and the answer is yes. And we are very much open. Standard Chartered is working with a lot of marketplaces, some in Africa, some global solutions. As I mentioned, the ecosystem play is becoming fast, and COVID has actually fast tracked that, right? So it's not just about the corporate and the bank anymore. We are working with marketplaces. We are working on multi-banking solutions. So yes, StanChart is very much open to collaborate. In fact, we have an whole discipline around promoting this whole. And if you see, we have also been leading many of the industrial initiatives around this space. To the second part of the question, status of open banking in StanChart. I think we are high up in the maturity curve. We have experimenting with IoT solutions. We have done, you might have seen in the press, we have done recently a blockchain solution, financing solutions based on blockchain. And like Devesh mentioned a little earlier, we have worked with insurance players on a blockchain solution and API-based solution. So yes, we are very much embraced and high in the maturity curve of open banking.
Thank you, Pramod. We'll take the last question. Comes from Chris Onada. The question is around one of the hindrances of smaller supplier is how to secure credit terms with most banks having a rigid traditional risk evaluation system. How do SMEs overcome this hurdle? Yes, I don't think there is any ready-made recipe today we have on SME financing. It's in the financing gap increases every day, and it's a massive topic for not just for the banks. In fact, this has been a hot topic for even International Finance Council, for example. Yes, while when Devesh was talking about the blockchain, how can a supplier convert their receivable into a collateral to get financing, possibly a solution. The big buyers sharing the PO data, invoice data for their supplier, SME supplier could be a potential solution. But it is not only in the hand of the buyer or the bank or the financial institution. The regulators also have a bigger role to play. For example, here in Singapore, because of the COVID-19, the government announced that up to 5 million Singapore dollar, SME companies are no longer have to put a collateral. Yes, we can argue Singapore is a different country, it's a smaller country, but then, at least the regulator, and understood the challenges, the problem that SME are facing, and it got accelerated even during the COVID-19 time. So they were very swift to introduce that particular a policy change, which helped a lot of SMEs to get into some of the financing. So answer is not only lies with the bank; it's a combination of various players have to come to the party to really address the SME financing. So with that, we close the Q&A answer session. I think to conclude, first of all, thank you very much all the participants who have taken time listening to the speakers. I thank you all the speakers. The conversation has been of very good quality. I think you really spoke in terms of the challenges that you all are facing in your respective industry. What are the key opportunities, and you've not even shied away from making a strong recommendation in how these problems or the challenges can be overcome, and by collaborating and finding a place for the finance into the overall supply chain and making the end-to-end supply chain ecosystem a reality through the convergence. Thank you very much.
Thank you very much.
Thank you.
Thank you.
Everyone for attending the webinar. Thank you, Sarat, the moderation. And thank you for all the participants for always attending our webinars whenever we organize them. Thank you, Philemon. Thank you, Mohamed, for bringing the conversation close home into East Africa and Africa. And I can assure you from our side, we will be seeking meetings with you to discuss devices, infrastructure, inventory, and downstream financing. For all the participants, the recording will be available and we'll send to all of you. And I can see also those asking for various contacts. Just reach us on info@hop-global.com and we'll connect you directly. Thank you. Have a great weekend and a safe weekend ahead. And God bless you all.
Thank you.
Thank you.
Thank you.